don't know why they are giving this much out, but every American family needs to see this. The government is basically giving...
This is not just a credit crisis. It's the beginning of a downturn that will change our lives. The credit crunch is about to trigger a huge spike in bankruptcies in the United States. Millions of Americans are likely to lose their jobs as a result. That's according to Goldman Sachs and other Wall Street banks that warned about the impact of the Federal Reserve's disastrous policies this week. Right now, the largest banks in America are extremely worried about rising loan delinquencies and defaults. That's why they're borrowing less money from U.S. businesses and consumers. At such elevated interest rates, the probability companies and individuals will end up falling behind on their loan payments is really high, and so is the risk of banks facing even bigger financial losses. These big institutions are observing disturbing trends that signal trouble for the U.S. economy. Their clients are withdrawing more money from their accounts each month, and they're also saving less. In some cases, account holders are already running out of savings, an indication that soon these individuals will be taking on more debt to make ends meet. Similarly, U.S. businesses that took our loans during the low inflation and low interest rate period are now reporting cash flow issues and difficulty to repay their debt due to the higher rate environment. With consumers reducing their spending, many companies are seeing sales going down, while their operational costs, including labor and leases, remain at all-time highs. The Federal Reserve's interest rate hikes pushed borrowing costs to soar since the first half of 2022, exacerbating banks' exposure to bad loans. The decision they made to limit access to credit lines comes as the threat of bank failures continues to rise. The outlook for U.S. banks hasn't looked this daunting since the great financial crisis of 2008. Tightening lending standards is the way these firms have found to save money to prepare for worst-case scenarios. These savings will serve as a buffer when the real crisis begins, and they know that something much bigger is coming because they're setting aside more funds every quarter in